traders, how is it going? It's Scott Schneider bringing you a shadow short from the live trading suite over in the futures room. Pretty chill day today. Nothing major to report. It was very average, small range. Wasn't like we had a plus 2,000 point day in the NQs or a plus 540 point range in the ES. You know, that is actually what happened. Today was crazy. And you can see we're looking at the SPX daily candlestick chart. And today's candle, takes out the past 3 to 4 trading sessions. Pretty significant. We've got our low of the year so far on April 7th. And what's important about that is that low was made in the overnight session. And so we just have to carry forward that the low of this move occurred in the electronic hours session. And that's not typically how lows of the year are going to be made. But that's just one data point, and there's a lot of moving parts to this wild market. So one thing that is interesting is in the SPX, we filled the gap from April 3rd, but we did not fill the gap from April 2nd. And let's keep that in mind. So the April 2nd gap fill would be at 55.7148. And we did fail to get into that range today. And so that's a form of excess. So that's the low that we would have to take out, and today's high did not get there. So we have excess still on the SPX cash market that would have to get repaired. So buyers still have work to do. And that does suggest that today's wild move off of headlines and just off of a market that was very, very tilted to one side of the boat. And when you have everybody on one side of the boat, it's pretty, that boat's going to knock over just the other way. So today could potentially have been a counter auction, but we'll take it for what it is now. And that's a strong day of buying. The internals backed it up. So let's take a quick look at the internals because I have to make this a short video. So on the internals, we got all 11 sectors that make up the S&P 500, dark green from the open. What that means is up over 1% from the open, but it's way more than that. We have XLK up 13% from the open. Healthcare up 6.5% from the open. Financials almost 10% from the open. Consumer discretionary 11%. Industrials 10%. You get it. Everything went banana pancakes today. Breath, nicey breath, 70.5 to 1. NASDAQ, 8.5 to 1. Very, very wild. Now, if we try to make sense of this thing, and NDX, just so we get a look at the NDX cash market, here's the difference. NDX, it did repair the gap from the second. So we did get into the April 2nd range in the NDX, and we will carry that forward. So NDX took care of business, filled in both the gaps that were left. There's no excess there at the moment. But on the SPX, we still have a gap. Now, if we take a quick look at the profile, and I do have to, have the profile in about 10 tick increments due to the wild ranges that we've been seeing. Like I said, today was a 540 point range in the ES, and we've been seeing standard 100 point periods. But we have a massive distribution. So if we zoom in to the H period, which is when we got the news that the tariffs we're going to be on a 90-day timeout. That created a close to a 200-point distribution of excess in the middle of the day session. So normally you're going to see excess at the highs and the lows, and that's what you want them. Or they're going to be in the form of gaps. The only other place that you could get excess is in these single prints, these distributions. And it's because there was no other period in the day where that area was tested. It was just that 30-minute window in H period. Now that's also, our day's halfback is within that period. So another way to think about that is it breaks the day up into two auctions. So we had the auction early on in the day, and that's where our TPO point of control is. It did not migrate higher, but that's, common on a day that becomes a trending day. And we have a poor low. So even if this was in single tick increments, because I do have it on another chart in single tick, it would be a poor low. There's no excess on this low. And we only have a very little bit of activity below the open. But it is important to carry forward two things that I think are pretty key and kind of, telling. Today's low was poor, and the low of 2025 was made in the overnight session. Now, with that said, if sellers are going to even come in to try to take this poor low back and repair it, they're going to have to take that 200-point distribution in the H period. And on the NQ, it's a, same thing, but they did get into the gap. So the level that you want to pay attention to tomorrow is going to be 5,400. 5,400 in the ES is one very important area. And then also making sure that they are able to repair the other gap. So if buyers are going to take this, take this control of the market, of the continuous two-way auction, then we need them to be able to repair the gap from April 2nd on the SPX cash market and in the ES. Same idea with the NQs in terms of the big distribution in H period. And the halfback hanging out in the middle of that range. I think it'd be wise to, if you don't need to be in the market, to sit on the sidelines, observe, because this is some very wild volatility. I hope you all are doing well and staying safe, and I hope to see you in the room. Peace. Hey, this is Scott Schneider from the Futures Room over at ShadowTrader's Live Trading Suite. If you enjoyed this video, please hit the like and subscribe buttons. And if you'd like to trade live with me in real time, please click the link in the description below. Have a great day and happy trading.